Can you guys hear me now? I think something was wrong with my mic. Can you hear me now? Nice, 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 nice. Okay, nice, 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 nice. Something was wrong with my mic before, but nothing is stopping us. Nothing is stopping us. We keep going. If you're here right now, I want you to comment your country in the chat. Comment your country in the chat. Let's see. We are learning about technical analysis today, and we have something packed. We have something packed. The goal of Fxlens is to help raise more profitable traders. I want you guys to be like me. I want you guys to be like me, to be profitable on the chat, to be profitable on the chat because I am profitable on the chat. I'm making money from trading and I want people to join me from the FX Lens community. Comment your country down below. I can see um, someone from Uganda. Sorry, I don't want to pronounce the name because I think I'm going to butcher it. I can see Nigeria. Nice, 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 nice. Um, we're going to have people keep joining as we go ahead, but we'll soon get started with our class proper because we have a lot of things to talk about and we have a limited time to talk about it, right? So I want you to bring out your notes. Bring out your notes so that you're going to write in this class. This is not a motivational class. This is an actual class to help you understand technical analysis. This is not a motivational class. Let me post this for some other people so that they can join in because we're about to get started and I'm going into technical analysis. Like what really is technical analysis, right? What really is technical analysis? That's what we are going to be discussing today. Let me see. Okay, let me post this so that other people can see that we are live. Comment your country. Keep commenting your country down below. If you just joined now, comment your country in the chat. Comment your country in the chat. Hey chat, comment your country in the chat. Let's go. Um, let's start properly. What is technical analysis? I'm gonna share my screen right now, so we just go and start from the basics. So hold on, let me share my screen. All right. All right. Keep commenting your country down below. I want to really know everybody here. I want to know everybody here. I'm seeing someone from Ghana, Kodie Benediction. I think I got that right. Kodie Benediction. Nice to have you here. Winning facts, right? Nice to have you here. Jessica from Ghana. Nice to have you here. Abdulaziz from Nigeria. Nice to have you here. Revo Black from Ghana. Nice to have you here. Yo, let's go. Trading Masterclass, beginner guide to reading the chart. Beginner guide to reading the chart. If you can hear me, I want you to comment in the chat that you can hear me so that I know that you're hearing me. Please comment in the chat that you can hear me. Let me open it right here so that I can see the chat because I'm about to go crazy. Once I get started with this, I'm moving. See the chat. I'm moving. Let me see the chat. Okay. All right. Cool. Trading masterclass. Let's go. Technical analysis masterclass. Learn how to read the story the market is telling. And I am Daniel Don, your instructor. Who am I really? Who is Daniel Don? Daniel Don is a forex trader. I'm a forex trader. I've been doing this for 3 years plus. Some people who have been doing this for just 3 years haven't been near as profitable as I've been because I came in from the experience of being a 7 years plus software engineer And then I entered into trading, and I've been doing this for a while. And 1 year into trading, I got profitable. The reason I got profitable so quickly than most people would imagine is because when I was starting, I paid proper attention to the basics. I paid proper attention to the chart. And because I did that in my earlier stages, it helped me to grow really quickly. Some people want to start too fast and just start taking trades randomly on the chart, and then they end up losing and losing and losing and losing. But the easiest way and the quickest way to learn trading is to go back to the foundation. That ABCD you missed, you got to go back there. You have to go back to that foundation and learn from there. So today we are going to be talking about technical analysis. What is technical analysis? Technical analysis is the process of studying a price chart to understand where price has been, where it is now, and where it's likely going next. I'll take that again. Technical analysis is the process of studying a price chart to understand where price has been, where it is going now, where it is now, and where it is going, right? So we are going to break this down. We are going to break this down, but we don't have much time. But we are really going to try to break this down and then see how we go from there, right? So, you know how the candlesticks are on the chart. We have red candles, we have green candles. For some people, the candle color is blue and black. Depends anyhow you want your candle color to be, basically, right? But what matters is that we have two parts of that candle, the bullish side and the bearish side. Basically, we are going to talk about that, right? But technical analysis is where we study that price chart to understand where price has been, which is the past, to understand where price is right now, which is the present, and to understand where price is going to. Now, analysis in trading is what separates trading from gambling. So if you don't know how to analyze the chart and you're just clicking random buys and sell on the chart, it means you're just gambling in trading, and you keep losing money by gambling. So we want to break down how technical analysis works so that you begin to understand, that money making side of trading that you probably do not understand right now. So let's go. Instead of relying on news or other company reports, technical analysis focuses on price movement, because every buy and sell decision is reflected on the chart. Every time somebody buys, every time big institution buys, every time big institution sells is reflected on the chart. The candlesticks moving on the chart up and down. Everything makes sense when you understand technical analysis, because you will know that every time the market is going up, something is definitely causing it to go up, right? And every time the market is coming down, something is definitely causing it to come down. Now, why do traders use technical analysis? Technical analysis helps traders identify, one, the market trend. Please, I want you to write down if you're not writing down already, right? Because this is really good stuff. This is really useful information. So take out all the distractions right now. This probably will define your journey for the next 1 year in trading. So if you don't pay attention to it, then you're probably losing a lot. So why do traders use technical analysis? Identify the market trend, right? Find high probability entry points, decide where to place stop losses, set realistic profit targets, and make objective decisions instead of emotional ones. Now, you will see that what we've just mentioned here already is probably the life cycle of what you'll be doing on the chart, right? You would identify where the market is moving to, which is the market trend. You would find high probability entry points, because sometimes have you ever had that experience? Tell me in the chat. Have you ever had that experience where you know that the market is buying, the market is going up, but you enter for a buy and it still blows your account or hits your stop loss, then start going in your favor? Have that happened to you before? Tell me in the chat. Tell me in the chat. Have that happened to you before? You know that the market is buying. You entered for a buy, but your stop loss hits, or your money has finished. Your money low, if it's Nigerians, right? Before the market continues to move in your favor. Tell me in the chat. Has that happened to you before? Okay. It happened yesterday, Abby. Your money is gone. So technical analysis helps you find high probability entry points. It means that it's not just identifying that the market is on a sell trend or a buy trend, it's identifying where to enter that sell trend from or that buy trend that makes sense for you to experience maximum profitability from that, right? Decide where to place stop losses. Now, entries are important, but stop losses are also important, right? So technical analysis shows you where is a possible place that this my setup would be invalidated if it gets there. Where is that possible zone, right? And this is what technical analysis shows you, helps you to pick that zone, because you can't be right all the time. There are sometimes you are wrong, you are simply wrong on the market. And with stop losses, you decide how much exactly am I willing to risk on this trade, and where exactly am I willing to admit and own up to the fact that my setup has been invalidated, right? And that's what technical analysis helps you to do. Technical analysis helps you to set realistic profit targets. You're not just targeting, oh, some people have lost money in trading, and let me tell you one simple reason why. Because they have a target that I want to make $1,000 on this trade. So they leave that trade running, 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 running until they want to see $1,000 profit. And tell me, is that you? You choose an amount in your head and you want to get there. Now, what technical analysis does is that you do not determine where the market is going to, right? You do not imagine where the market is going to. The market leads and you're simply following, right? So if technical analysis has shown you that, oh, in this zone right here, price is probably to react and this is a good place to take profit, then you take profit there. It's not wishful thinking anymore, right? It's following a system. It is following a system. It's not wishful thinking. It is following a system. So you're not determining this trade is definitely going to give me $1,000. No, you're determining where you will hop out of that trade from what the market is saying, from what the analysis is saying, and finally to make objective decisions instead of emotional outcome, right? We've already explained this. You're making decisions objectively instead of wishful thinking, instead of emotions or fear. You're sticking to technicals, to what you're seeing, to what the chart is showing you, right? One thing that confuses people are these two concepts: technical analysis versus fundamental analysis. So what is technical analysis? Technical analysis is the studies of the chart. You study the chart. It focuses on price movement and best for timing entry and exits in the chart. So with technical analysis, you're studying the chart, you're focusing on price movement in the chart, and it's best for timing entries and exits, right? This doesn't have to do with, and we'll get to fundamental analysis, but with fundamental analysis, there are a lot of other variables involved. In technical analysis, we are purely looking at the price action on the chart, the candlesticks on the chart, the chart patterns we are seeing on the chart. We are purely looking at those price actions to take decisions in our trading. Now, for fundamental analysis, it's a bit different, right? We study news and economic events, focus on the reasons behind price movement, and help understand long-term market direction. Think of it this way. There was a war happening between the US and Iran recently. Now, everything that happens in the market is not a game. Some people view the market as a game, and that's where it doesn't make sense to you. Things that happen in the market are controlled by economic events in the society, right? So oil prices went off. Why? Went up. Why? Because the Strait of Hormuz was blocked for a while. Gold started going up in value because people were switching to buying natural commodities, right, than just saving USD and dollar. So these things impact the chart. Now, this is where fundamental analysis comes in. It gives you the direction on where the market is going to go long term, where the money is flowing into, what's happening in the world, the news release is happening in the world. It gives you all those details. And then with technical analysis, you're able to pinpoint entries, exact stop losses, exact take profits. So you see how, in a way, technical analysis and fundamental analysis works hand in hand, right? Now, if you have the Fxlens app in your phone, for free, you can go to Fxlens, open the Fxlens app, click on News Outlook, and then you get access to all the daily news releases on the app. Download Fxlens for free from App Store and Play Store. You get access to all the daily news release. I think every 6:30 a.m. we drop all the news releases for that day, show you the high impact news, and help you to even get specific directional bias for that particular news and how it would affect a specific currency pair, right? I think that part is paid. It's among the pro users, but the basic things about the news, how high impact it is, the previous data, like the forecast, the actual, everything, you have it there every day for free on FX Lens. So look at what we are going to learn today, because we are getting into the deep part. We are getting into the deep part right now, and we are going to learn types of technical analysis. We're going to talk about price action. We're going to talk about technical analysis tools, market structure, candlesticks, and how all of these things work together. Let's go. Types of technical analysis. We have price action. Studying price movements directly without depending on indicators. I know that many people have so many indicators that they are probably using for analyzing the chart. We have MACD, we have RSI, we have different, there are probably thousands of indicators on MT5 right now. But when we talk about price action, we are talking about studying the actual price movement directly without involving any indicators on the chart. You're just studying what the price is saying. What are the candlesticks saying? What is this pattern saying in the chart? What is the trend saying right now? What is the 15 minutes time frame saying? What is it saying on the daily time frame? What's it saying on the weekly time frame? It's called price action. Without any, depending on any indicators, we are analyzing the chart itself. Somebody say we are analyzing the chart itself. We're analyzing the chart itself, without looking at indicators. Now, we have indicator-based analysis. I hope you're writing. This is why we put it in a slide so that it will be really easy for you to follow along. Using mathematical indicators like RSI and moving averages to support trading decision. So some people use indicators like RSI and moving averages to support, their decision. Even MACD, right? There are so many of them. So they use that, you put it in the chart, and then it helps you to get a bias as well. Now, using these tools are entirely not wrong. You can choose any of these indicators. If you study them very well and it works with your system, you can use it in your chart. There are some people that indicator, they shame people on using indicators. But me, I'm here on the chart to make money. If using indicators is making you money, use the indicator on your chart. The only caveat I'm going to put to this is that you shouldn't be having 10, 15 indicators on your chart. You shouldn't be having 5 indicators on your chart, because at the end of the day, you'll just be confusing yourself with different knowledge that doesn't work together. So that's indicator-based analysis. Remember, we've talked of price action analysis, we've talked of indicator-based analysis. Now, what is price action? Price action is the study of how price moves on the chart. What is indicator-based analysis? Indicator-based analysis, indicators use past price data to generate signals. Examples include the moving average, the RSI, and the MACD, like we've already mentioned. So it studies what has happened in the past, and then with that data, is able to predict what's going to happen in the future. Okay, that's just what it means. And then together with your price action analysis, you're probably good to go if you use it well. Why do we focus on price action? Price action is the source of all indicators. Indicators are created from price data, right? This is why price action is key. This is why no matter the system you're using, no matter what you're using to trade, even if you're using our app Fxlens, no matter what you're using to trade, price action is king. Remember when we talked about indicator, we said that the indicators, how they work is that they use data from the past to predict the future. What data is that? They use price data. They use price data. So no matter what you're using, no matter the system you're using, you should be able to realize that price action is king and spend some time studying price action to know what really it is, right? So what are price action tools? Price action tools help traders organize the chart and identify important areas where price may react. These tools don't replicate the future, they help us interpret what the market is doing. Okay, and we have some of those things. We have support and resistance. Now we are going into the interesting places. We are going into the interesting places of technical analysis because we've already started. Okay, we've already started. Now we are going deeper into it. And the first thing we are going to look at for technical analysis is support and resistance. Support is a price level where buying pressure has historically prevented price from falling under, right? Resistance is a price level where selling pressure has historically prevented price from rising further. I know that this might sound big right now. This is big English. We are speaking too much big English on the chat. Who understands this already from here? We are speaking plenty big English right now, but we are going to break it down. Don't worry. Support is a price level where buying pressure has historically prevented price from falling further, while resistance is a price level where selling pressure has historically prevented price from rising further. Let's look at this, right? Look at this diagram. Look at this diagram. You can see support, you can see resistance. Now, where's the support? You can see the support is right here below. The support is right here below. I don't think you can see my cursor, but the support is right here below. The red line is the support. So you can see that anytime the market went up and came down, is respecting that support. So support is a point where the market has tested, and to go below it is finding it difficult to break that level and go below it. That's what we call the support line on the chart. So you can see once the market got here, it bounced off from here upward again. Once the market got down here again, it bounced up here again. And see this one, it still came here and it bounced up. Now look at resistance on top. Resistance is the point. Remember, like we said here, resistance is a price level where selling pressure has historically prevented price from rising further. So you see, anytime price rose up to this point, it rejected it and came back down. Anytime price rose up to this point, it rejected it and came back down. This is one of the most important concepts in technical analysis, in price action. This right here is one of the most important concepts. So I want you to pay attention to it. Now, you see right here, it came up and it broke this resistance zone. Now, this also tells us something. You can see that after it broke this resistance zone, it came back down to retest this resistance zone. What we call this is break and retest on the chart. So finally, he was able to break out of this resistance point and he retested it. Now you can see that the buy continued upward. So what happens right here is showing you that a resistance level can turn to a new support level. Okay? A resistance level can turn to a support level, and a support level can turn into a resistance level. Now, look at what happened here. Price tested this resistance level, came back down to the support, tested this resistance level again, came back down to the support, and finally, it broke this resistance level. Now, the moment it broke out of this resistance level became a new support level. This resistance level became a new support level. So when price came and broke above this resistance level, once it came to test this level again, you see, it rose to the upside. Now a new resistance level was created right at this zone. Okay, if you're following me so far, I want you to drop W's in the chat. Drop W's in the chat. Drop W's in the chat. Let me know that you're with me. I'm watching out for it. So price broke this level, and this changed to a support level. Okay, then a new resistance level formed. The same thing will probably keep happening. You see, price finally broke to this level, and then it retested it. And if you want to guess what happens here, what happens after here, drop it in the chat. This resistance level would become support. It would become the new support level. So in price action, we are checking how does support and resistance level impact the price movement, impact this candlestick movement. Let's look at another example right here, right, with an actual chart, what an actual chart looks like. Now you can see this level right here is a support level. So what happened? When price went up, it came back here to retest this level. It retested this level again. You know, it bounced off this level. Remember, the support level is the level that price is finding it difficult to go below it. It keeps bouncing up. Okay, bounced up, came back to this resistant level. You see, it first tested this level here, and then it came to test this level again. Now, what does that simply show you? It simply tells you one thing. It simply tells you one thing, that anytime there is a high on the chart or anytime there is a low on the chart and the market is coming back to test that high or test that low, you should be watching out for a significant move in the market. Either the market would bounce up from that point if it's a fresh test, for example, this is a fresh test, it's just the first time it's testing it, or the market would break out of that zone, turn that zone to a new support or a new resistance zone, and continue in that particular trend direction. If you did not know this before, you've learned this right now. This is one interesting way to take trades, but we are not done. Oh. If you stop here and you hop out of this call, you're probably not going to get enough value from this, because there are still more nuances to this and more things to talk about. We are not done, oh, but this concept alone like this could make you serious money. I've made thousands of dollars, literally, I've made thousands of dollars from just trading support and resistance. I'm telling you. So let's go. What are trend lines? Trend lines are lines drawn to connect. First of all, tell me, did you get that? Support and resistance. Did you get that? Did you get that? Someone that's following, did you get that? I'm seeing W's. I'm seeing W's in the chat. Tell me, did you get that? Before I move on. Because we're entering into trend lines. Okay. Makes sense. Makes sense. Yeah. I'm saying something about higher time frame or the actual trading. Definitely, the trading time frame matters, but right now we are talking about price action. Definitely, support on a 15 minutes chart is different from the support level on a 1 hour time frame or a 4 hours time frame. I'm saying that, definitely, those are different things. But right now, we are moving. Is a train. Don't worry. We are in a moving train. Is a train. We are moving. Don't worry. Just stay with me. What are trend lines? Let's go. Trend lines are lines drawn to connect important highs or important lows. They help traders visualize the market trend and identify potential area where price may reverse or continue. Let's look at this. Trend line, listen to this again. Trend lines are lines drawn to connect important highs or important lows. First of all, what is a trend? A trend is the visible movement direction in the market. The visible movement direction in the market is the trend. For example, this is a trend. We can clearly see, what is this trend? Tell me, somebody that knows it already. Tell me, when the market is moving like this, what is the trend? What's the trend right here? Look at it. The market is moving like this. What's the trend right here? What's the trend? Okay, drawing a trend line according to two nearby highs. But what's the trend first? What's the trend? I want to see. Who knows it. What's the trend right here? This is a downtrend, exactly. A downtrend, a bearish trend, right? So trend lines, what are now the trend lines? The trend lines are drawn to connect important highs and important lows on the chart. They help the traders visualize the market trend and identify potential areas where price may reverse or continue. Now, this is what a trend line looks like. It's used to connect important highs or important lows. What's this trend? This one is an uptrend. This is an uptrend. So this connects important high. What is a high? A high is something like this, where the market comes up to create a new peak point in the chart before it continues moving downwards to the trend. So it's like a what's it called now? Peak and throw, right? It's a peak and throw. Is a movement. There's another name for it. It's skipping my head right now. But if you have that name, comment it in the chat. It's skipping my head right now. But you're connecting important highs in the chart to create a pattern of how the market is moving. And in price action, trend line is very important. In price action, trend line is very important because you will notice that the market usually respects the pattern of the trend line it is moving in, and it creates system of entries. Remember, in technical analysis, we are trying to make sure that we don't only identify the direction the market is going, but we are identifying entries where to enter into that market. For example, look at this. Some people might identify that this is a sell. You see it clearly that this is a sell. The market is selling, and someone might go to enter the sell directly from here. Someone might enter this sell from this position. What happens when you enter from this position? It means that the market would finally buy up to this point, and probably your account would be blown by this time. The market bought, your account is blown, your stop loss is probably hit if you had one already, and then the market continues selling. And this is so painful. This is so painful. The market sells, but now the sell happened without you. The sell happened, but you're not involved. Technical analysis is helping us to determine where we are entering into that market from. So, like in this case, trend line, the market bounced on this trend line. It bounced on this place in the trend. Now, because we have a trend line extended, what do? We wait for the next time the market is going to rally up to touch the trend line. And when the market touches the trend line like it did here, this is a potential entry to continue the move of a sell. You see? You see how technical analysis helps us with entries. It helps us with where to enter. Where are we entering from into the market? Where are we entering from? I want to carry everybody along. So if you understand the W's in the chart, it's helping you see where entries are forming. You see, he did it right here again. It came up to this point and it still bounced down. Okay, so this is a downtrend, and now this is an uptrend. An uptrend is connecting the important lows in the chart. A downtrend is connecting the important highs in the chart. So look at it. This is an important low. The market rallied up and it came down again to give us a correction. Okay, this is called a correction move. Yeah, it's a correction move. So the market, when the market is trending, it usually has corrections and then continuation of the trend, right? So this is the market trend is trending downwards. It had a little bit of correction. It's called a pullback as well, right? So it had a little bit of correction. It continued the trend. It corrected again. It continued the trend. It tried to rally up here again, went down, corrected again right here, continued the trend until it finally came to break the trend. Now, just like support and resistance, we also have break of trend lines. And break of trend lines will now help us determine when the market is changing direction. So you see why trends are important, because whether the market respects the trend line or it breaks the trend line, it shows us something that's happening in the chart. That's why it's called price action. Okay, so when the market finally broke out of the trend line with this powerful candle, now we have one confirmation that the dynamics and the trend of the market is changing to a buy type of trend. You see, it all begins to make sense. Gradually, it begins to make sense. Now, this is a buy direction in the market. This is a buy move. And now, an uptrend is connecting the low. So this is a low, this is another low on the chart, and this is what the trend line is. Okay, someone said late entry. I guess you're referring to where stop loss hits somebody out here. Okay. Yeah. So if you really understand trend lines, if you really understand trend and trend lines and pair that with support and resistance, I'm telling you, if you pair that with support and resistance, now see, sometimes people try to overcomplicate the system. You're using everything. You're using RSI, you're using indicators, you're using trend, you're using Fibonacci, you're using APC, you're using PDP, See, the simplest system. Have you noticed that the most profitable traders use very simple systems? And you'll be wondering, how do they keep making money with this simple system when I'm trying to use all these complex things and nothing is working? How do they keep it so simple? It's usually the smartest people that lose the most money in trading. The smartest people lose the most money in trading. right? But the people who just have a simple thing they want to see on the chart, I want to see my trend line touch. I want to see a breakout of the support and resistance level. I want to see a breakout and a correction, a pullback down to the trend line again, and then I'll enter. I want to see a bounce from the support and resistance level. Those people make the most money because their systems are simple enough that it is consistent enough for them to keep following it every single time. They don't have to, if they fail now, they don't have to change or tweak their system. No, they are already confident in their system. So whether the system fails now, it doesn't negate that the system is working. Okay. Some people take one big trade in their account and end up blowing their entire account because they don't have a system. If you have a system and your system has proven that out of every 10 trades you take, you have a 60% win rate. Now, one failure won't make you to change the system because even in your system, you're accounting for when your system would fail. But you know that using your system consistently provides more wins than failures for you. So you just stick to that system. Comment in the chat. This is streaming. This is streaming. This is streaming. So we should keep bringing those W's in the chat. W's, W's, W's. Let's go. Next one, supply and demand zone. We are moving quickly now. We are moving quickly now because our time is going. Our time is going. So we are trying to move quickly now. These are areas where large buying or selling activity previously entered the market. Price often reacts when it turns to these zones because buyers and sellers may become active again. Okay. So supply and demand zone, these are important zones. It's like support and resistance. It's almost like support and resistance, but just a tiny tweak, a tiny difference. It's almost like support and resistance. But supply and demand zones are zones. They are not a specific line on the chart. These are places where there was probably a lot of buying pressure at that zone, or there was probably a lot of selling pressure at that zone. So what happens? How did the market even buy and sell? The market buys and sell because the big guys have put money into the market to influence the move of the market, or they've removed the money from the market and is making the market tank down. Me and you as retail traders, we do not control this movement on the charts. We can only take advantage of it. We do not control nothing that's moving in this chart. It's controlled by the big guys. The big guys. We have the big guys who are controlling, who are putting billions into the chart, who are putting billions, not your $10 so, or your $100 or your $1,000 or your 10K or your $100,000 that's controlling this market. Nope. Nope. These are big institutional traders. So what does support and resistance show you? Support and resistance shows you supply and demand zones. Sorry. The supply and demand zones show you where these big guys came in or where these big guys left. Because usually when price rallies up to that point again, they probably would still influence the market again in their favor. Once you understand trading from a point of life, right, then everything starts to make sense to you. Once you understand trading from a point of business decision, everything starts to make sense to you. Okay? Everything starts to make sense to you. Let me explain something quickly. So imagine that you are an institutional trader, you're a big guy, and right here, you guys pumped a lot of money into this market. Right here, you guys pumped a lot of money into this market to make this market move up in your favor. Okay? Now, as that big guy, if you've not gained enough profit in that trade and that market starts to come down again to that point where you entered before, the market starts to come down again, what will you do as the big guy? What will you do? You don't want to make a loss. So you don't want this money to come down and start pushing down below that your entry point, because then you start losing money. What do? You simply make sure that this place is holding still. So you're pumping in again, hoping that other people too would keep pushing this market up. So you're entering again. You see, it starts to make sense to you why the market would come back and continue moving up. This is not a game. This is life. This is people that actually control this market making these calls, right? So you see, the market came back down here after all this dribbling here, pushing up. It came back down here, and what happened? The direction changed again to the upside. Are you getting this? Comment below. Are you getting this? Are you getting this? Is it making sense? So the market was down here before. It went up and it came back down here again, but it went up back. Now, this is not just a line, this is a zone. So you can see this entire place is the zone. And once it got here, it had to rally back up again to the top. Once it got to this top, it rallied back down again. You see, it's almost the same thing with support and resistance, just a little bit different. It's called supply zones and demand zones. Okay. Um, if that's clear, as clear as it can be right now, because I know some people will still be confused. Some people will still be confused. It's almost like support and resistance, but this supply and demand zone, almost the same thing. Now, chart patterns, Baba. This is one of the Baba of them all. This is one of the biggest boys in technical analysis. These are the big boys of technical analysis coming in. Chart patterns are recognizable shapes created by price movement. They help traders identify possible continuations or reversal opportunities. Chart patterns are recognizable shapes created by price movement. They help traders identify possible continuation or reversal opportunities. Here are some candlestick patterns. Okay, here are some candlestick patterns. We have the head and shoulders, we have cup handle, we have double top, we have double bottom, we have triangle, we have flag, we have wedge, we have pennant, we have ascending triangle, we have descending triangle. Obviously, we cannot be going deep into all these things today, right? We cannot be going deep into each individual one today. But you see the most important ones I want you to first learn, right? That's why you're on a class with Daniel Dunn, because I've used all of them. And I can point out some of them that are very important for you to learn. The head and shoulders is very important for you to learn. The double top is very important for you to learn. The double bottom is very important for you to learn. And the triangle is very important for you to learn. Now, not saying that these other ones are not important, but you see these ones I mentioned, they are so important. They are so important because the market often respects this type of movement in the market. So you have the shoulder here, you have a head here, you have a shoulder here. What is simply showing you is that when the market comes back to test this point, which it has tested before, you see how things like supply zones, demand zones, candlesticks, what's it called again? Support, resistance. You see how all of them come into play in chart pattern, because you can call this a resistance zone right here. You can call this a resistance zone. And you can see that when market came to test this resistance zone again in a head and shoulder pattern, what did it do? It continued back down to the downside. Okay, so see how even support and resistance plays an important role in chart pattern. Okay, you can see it right here too. Double bottom or double top. This is also a resistance zone. It bounced off here before, went like this, came back up to bounce back there again and continue to the downside. This is a support zone. It bounced here, went up, came back to bounce here again, and then what are we expecting? We're expecting a continuation to the downside. So you can see how in price action, we keep using past data to predict where the future data and the future points of the market is moving to, right? You can see, okay, someone's talking about Wolf of Wall Street. Interesting movie. Watch it if you can. It's a good movie. So you can see that happening right here too. Now in the triangle movement too, you see the market in a triangle format where we have the trend going like this from here. We have this other one going like this, and we are watching out for a breakout of the triangle. Now, when a breakout happens on the triangle, it determines where the market is going to. So you can see right here in this movement, the market broke out to the upside. This is confirming a bullish bias for us. It's confirming a bullish bias for us. So we are saying that market has successfully broken. Sellers and buyers are competing. View it like a competition. These people want it to sell. Nope. These people want it to buy. It got here again. These guys are like, nope, sell. It got here again, selling pressure, but the buyers overcame it. Boom. Buyers are like, nope, this is going to buy. The sellers are like, you guys are joking, man. But with their last strength, they push it down again. This market is selling. And the buyers are like, you know what? We're gonna show you that we came with a bazooka. And then they push it upward, boom, buy. The sellers tried to hold it right here, but they couldn't. The buyers overcame it and broke out of this triangle that has been forming. Now, what has happened? The buyers has won against the sellers in this case, and the market is now pushing up for an uptrend. Me, as the retail trader, I am not competing with anybody here. I'm watching who is winning, who is going to win, because it's the winner side I'm on. I don't have a team. It's the winner side. So look at it. The market broke up to the upside from this move, and me, I'll now be looking for where to take my entry somewhere here. Again, price action would help you determine where to enter the market, where to exit the market from, and where to set your risk appetite, your stop loss to. Okay? It's not just about knowing the trend. It's not just about knowing the trend. You will know the trend and still keep losing if you don't understand technical analysis. Now, we talked about a lot of things here, but obviously we can't talk about all of them. So go to the lens section page on Fxlens. Go to the lens section. Some people who use Fxlens just use it to analyze the charts, like screenshots, blah blah blah. It comes up with a setup for you. But go to the lens section on the app, right? For free. Our learnings are free on the app. We have a lot of free things on the app that people are not taking full advantage of. So in the lens section, you will see different chart patterns there. You will see the head and shoulder, double bottom, double top, liquidity graph, morning star, bearish pin bar. There are a lot of them there. And funniest, the good thing is that we keep adding more lessons here for free. So look at head and shoulders. You get an explanation of what really head and shoulders are, a full breakdown, a full breakdown. So go to the app right now. Go to the app after this class. Go and look at it for free. Go and look at it for free. But we need to move ahead now. Um, Market structure. Okay. Market structure is the overall direction of the market. We are ending this class soon because we'll definitely continue. We're having weekly classes, so we'll definitely continue some other time, right? But we are ending the class soon. Market structure is the overall direction and behavior of price on the chart. It helps traders answer questions like, is the market moving up? Is the market moving down? Or is the market moving sideways? Okay, this is a bit mostly part of what we've discussed already. So you're answering it. Market structure helps you determine where the market is moving to per time. Understanding market structure is one of the first steps before entering any trade. Types of market structure. We have the uptrend, like we've discussed, where we connected the trend lines. We have the downtrend. If you understand this, please comment something in the chat. I want to see that you're following me. We have the uptrend, we have the downtrend, we have the range. And every market is always in one of these three conditions. Either the market is trending upwards, the market is trending downwards, or the market is moving in a range. Okay, I think we had something like that. Let me put it. So you see right here in this supply and demand zone, the market is actually moving in a range. The market structure in this supply and demand zone is a range. And every type of market has how the market is traded. Okay, the way you trade an uptrend won't be the same way you trade a range. All right. So, candlestick. A candlestick is a visual representation of price movement during a specific period. I'm breaking it down because there are so many people that do not understand these basic things. And I know some of you here, you guys are big guys. You already know it. Yeah, it's also called consolidation. Yes, it's also called consolidation, which is the range movement. Some of you guys already know this information, but it's okay. Relax your mind. Relax your mind. Each candlestick tell us four things: the opening price, the closing price, highest price, and lowest price. Each candlestick on the chart tell us the opening price, the closing price, the highest price, and the lowest price. You can see this green candle. This green candle is a buy candle, and this red candle is a sell candle. Now, this part of the candle is the body of the candle. Okay, and this is where this green candle opened from. This green candle opened from here. This is like a movie because this candle opened here, right? At some point, this candle sold to this point, which is the low. And then after selling to this point, remember I opened here, it came back up and it started moving to the up direction. And it moved, and got to this high point. Then it finally came back down again, and this was where this candle closed. Now, the candlesticks, depending on which time frame you're on, this can be a 15 minutes candle, this can be a 1 hour candle, this can be a 4 hour candle, a 1 day candle, a 1 week candle. All of them will tell you something like this, where it opened from, the lowest point it got to, the highest point it got to, and where it closed at. Now, this part that is like a line is called a week. A week. A week. It's called a week. Think about a physical candle. If you've used candle in your house, if you're Nigerian here, back then we don't use candles anymore. But back then, if you grew up in Nigeria, remember that there was a time we had candles, right? I had candles everywhere. Now it's so rare you can't really find candle. I haven't seen any candle in years. So yeah, this is what this means. Now for the sell part, you see it opened here and it started buying. It got to this point, which is the highest high. Then it started selling. It sold down to this point before it came back up here and closed here. Okay, came back up here and closed here. So yeah, this is what candlestick means. This is how to tell the story that is happening, the story of the candle. Everything is a story. Everything is a story. You have to look at it as a story that's being told. And when you look at it as a story, you realize how interesting the market really is, because some people don't know that, right? And we have what we've explained, the bullish versus the bearish candlestick. A bullish candle closes higher than it opened, a bearish candle closes lower than it opened. Look at it again. Bullish candle, it opened here, but look at where it closed. So it means it is bullish. It is the bull, it's rising. So it closed higher than where it initially opened. A bearish candle closed lower than where it initially opened. Look at the open here. Look at the final close down here. That's why it's bearish. It closed lower than where it opened. All right. What do wicks tell us? Long upper wick. It tells you that price tried to move higher, but the sellers pushed it downwards. Price tried to move higher, but the sellers pushed it back down. Okay. Okay. Long lower wick tell us that price moved lower, but buyers pushed it back up. Wick reveals price rejection at a specific level. Wick is showing you that price rejected at this zone. Price tried to move higher, but the sellers finally pushed it down a bit. It's still closed bullish, but it's showing you that the sellers pushed it back down when price tried to move here. So what is it telling you? It's showing you that there are active sellers in this market. Now, depending on the pressure these sellers are using to come and the point it is at in the chart, it now determines what you should do. For example, when you see weak rejections like this and it's a support, is a resistance zone, there's a resistance zone right here, and you're seeing multiple weak rejections, showing you that the sellers are in this market and they are trying to respect that support zone. So what do? You position for a sell move in the market. Same thing, you see multiple weak rejections. And the market is at a support. Up here is resistance, right? So multiple weak rejections at a support zone. Then what do? You start positioning for a buy. You see how the candlesticks, the chart pattern, the market structure, support and resistance. What again did we discuss? We discussed support and resistance. Yeah. We discussed supply and demand. You see how everything begins to work hand in hand to make sure that you understand technical analysis, price action, and determine where to enter and exit the market. Okay? Putting it all together, how technical analysis works together. You identify the market structure like I was explaining. You mark key price levels, support and resistance levels, supply and demand levels. You read the price action in the chart. Where is the trend going to? What is forming in the chart? What patterns are forming in the chart? You use candlesticks for confirmation. Candlesticks, things like the wick, things like where the market is closing, where the market opened from. You use things like that to determine your confirmation on where you should enter where you should take profits, and where you should exit the market. Identify the market structure. Is the market trending up? Is it trending down? Is it ranging? This should always come first. Okay? Is the market trending up? Is it trending down? Is it ranging? Two, you mark key levels. You mark your support, you mark your resistance zones, you mark your trend lines, you mark your supply and demand zones. These are areas where price is likely to react from. Okay? Step three, you observe price action. How is the price behaving around these levels? Is it respecting that level? Like when we talked about multiple weak rejections on a support or on a resistance zone, is price respecting that level? Has it broken through the level? When it does, it breaks through a resistance level, the resistance changes to a support. Is it rejecting at that level? These reactions provide us valuable clues on the next action to take based on that price data. Step four, you wait for candlestick confirmation. Instead of entering immediately, wait for price to provide confirmation through candle behavior in the chart. We'll talk about some confirmation. We'll talk about some confirmation type of candles in another class. We'll talk about multiple, we'll properly discuss multiple weak rejections and hop into our trading views and really show candlesticks. Like, what does it look like when a candlestick is rejecting a zone? When do candlesticks respect a particular zone? And don't worry, we are keeping our lives free. So these classes would be free. Just be active with us, and you keep seeing our classes because we have a lot to talk about. Instead of entering immediately, wait for price to provide confirmation through candle behavior. This helps reduce false entries. Yeah. Lastly, apply proper risk management because no trade is guaranteed to be a winning trade. Now, if Fxlens in the app, we have a position size calculator, and it's one of the best position size calculator I have ever used in my whole trading journey, right? Because I tailored it to be able to provide position prices, calculations for both normal forex trading pairs, indices pairs, some crypto pairs, volatility and synthetic pairs like derivative trading and all of that. So it's tailored for all of those tools, and you can use it to easily calculate your stop loss. If, say for example, right here, this is an account of $1,000 and you want to reach just 2% of this account, and your stop distance is 200 points right here. Okay, you can simply click on calculate for this, and it shows you that you look at your max risk on this trade would be $200 because you're risking 2%. This is the lot size. It gives you the exact lot size you can use to open this trade, and then you just put your values in the chart, and it opens that trade for you. Now, even if you don't know how Fxlens is built, is that even if you don't know, we lost that. Even if you don't know the stop distance, once you tell us where you're entering from and you tell us where your stop loss is at, and click on generate stop distance, we will generate the exact stop distance for you. And then you just click on calculate position size, and then we still give you the same lot. You give you the lot size for entry. If you use Fxlens to analyze that setup, it's even way easier. We fill in all the values for you, and then you just click on calculate position size, and we give you the lot size to use. Are you following me? Are you following? So start using Fxlens to get your confirmation and to confirm your setup. Now, after learning price action, after learning technical analysis, you can add other things. For example, we talked about adding some indicators to your chart, adding like things like RSI and all of that. Another thing to add is Fxlens. If you're using Fxlens here, I want you to comment below because a lot of people are using Fxlens. Someone told us about how he's taking his daughter out in the US for some treat, and I think it was Disneyland or somewhere. He was taking his daughter out because he just made $15,000 from using our signal on Fxlens, right? Taking a trade that he used the screenshot of the chart to analyze and voila, he got him a winning setup and he made $15,000 from that move. So imagine the risk to reward. You buy a plan of $9.99 or you buy a plan of $17 or thereabout, and you make $15,000. I'm not saying everyone makes $15,000. No, no, no. I've seen people who have changed their $9 profit to $100 plus. I've seen people who have done more than that. I've seen people who have made $2,000, $1,000, all of that kind of profit, right? But what I'm saying is that it helps you as a final confirmation tool. It helps you as a final confirmation tool. If you've analyzed how I use FXLens, let me tell you my strategy because I'm already a professional trader, right? How I use FXLens for myself is that I use it as one of my confirmation bias. You know, you have different confirmation bias. So how I use it personally is that FXLens, I analyze the market and I know that, you know, this market is bullish. I probably want to have an entry somewhere here, all of that information. Then I take a screenshot of my chart. I feed it to FX Lens, right? And FX Lens confirms that bias for me. Say FX Lens now tell me, yeah, it's a buy. This is an entry. Now, maybe before I wasn't even thinking of that place as my exact entry. But because I've seen it on FX Lens and it gives me an explanation of, oh, why is this place an entry, right? So once it tells me that information, then I'm able to trust that my setup more, you see? So it's not just that I'm blindly relying on an AI tool, right? This is a professionally trained AI tool, by the way, trained on my own system and thousands of other big people system. You know, it brings it together and gives very good setups. So not just that I'm relying on the tool, but I'm using it as an extra confirmation to my own. And I've seen people who have used it this way come out best at it. So that's why we are not holding knowledge here. We are teaching you technical analysis as well, so that you get to analyze too. You analyze and you use it. And once you add everything together, once you bring everything together, to the moon. Say W's in the chat. W's. Okay. Finally, we have come to an end of this session. If you're not on the app, you're going to be missing important information. We have a community on the app. It's called the Trias community. We strongly share a vision that the ones who try to win, the ones who try the most win the most. This was a mistake. We share a vision that the ones who try the most win the most. For the ones who know they won't give up so easily, join us in the Trias room now. If you're not on FX Lens community, download the app right now. It's a free community. We have thousands of people joining in. Download the app right now. We have mentors on the app, professional traders who give out signals. We give out trading signals for free. We also give out premium signals for our premium users. If you want to join us on the premium side, join us. But even if you're not on the premium side, just enter first. We give out even free signals on the app. We talk about news releases, what our bias is for the week, and just carry traders along in the community. So if you're not on Fxlens, download the app right now, join the community, and we'll see you inside there. I'm active there as well. Guys, I've come to the end of this session. W's in the chat. W's in the chat. Did you learn something from this? I want you to comment below. Did you learn something from this class? Did you learn something from this class? Further classes, we are probably going to look at things like time frame analysis, like 15 minutes, 1 hour time frame, all those kind of stuff. But this class was to immerse you into the world of technical analysis, to understand how technical analysis helps move that needle to move you from the unprofitable point to the profitable point. So if you're still here, leave some W's. Tell me, did you learn something? Did you learn something? Is there an exact question you want us to talk about? We are going to post something on the community right now. Ask your questions in the community, and then under the post we are going to make, one of the mentors, please make a post. I think Zara should make a post in the community asking people if they have questions from this class. If you have questions, go to the community right now, go to the comment section of that particular post and ask your questions. And then in our next live or right there in the comments, would address your questions. Would address your questions. Yo, this was a packed 1 hour. This was an interesting 1 hour. I love to share knowledge. This was an interesting 1 hour. Yo. Um, with that said, fully active. God bless you, bro. Yeah, yeah, yeah. God bless you very much. Yeah, yeah, yeah. No, no, no. We are gonna raise an army of profitable traders. Mark my words. We are going to raise an army of profitable traders. That's what I'm here for. We are gonna raise an army of profitable traders. We are definitely gonna raise an army of profitable traders. And I want you to join this moving train. We are in a moving train, and I want you to join our train. Let us go. Okay. With that said, we've come to the end of tonight's live. I'll see you in the community on Fxlens. I'll see you inside the community. So comment inside the community under the post we are going to make right now. Comment there, and I'll see you next time. Take care of yourself, guys. Bye.